Welcome to this deep dive. We're unpacking Toronto's real estate market again, really trying to help you make sense of it all. Last month, remember, we talked about those little green shoots. Signs of life, but it's still pretty tense.
Yeah, and it turns out they weren't just, wishful thinking. The July numbers, they're in. And they're showing the biggest shift we've seen all year, really. We're moving past fragile hope.
Towards actual momentum.
Exactly, real momentum. So understanding this new landscape is, well, it's more crucial than ever.
Okay, before we get right into the Toronto details, maybe set the scene for us. What's the bigger economic picture? Bank of Canada, all that.
Sure. So the Bank of Canada's key rate, the overnight rate, it's holding at 2.8%. That keeps the prime rate at 5.0%. Now, hear about financial stress, right? Non-mortgage delinquency rates are up, back to 2010 levels.
Okay.
But for you, thinking about buying a home, that pressure often means the Bank of Canada stays cautious. They probably won't rush to raise rates. And that's stability. It makes borrowing more predictable, helps affordability.
Right, predictability is key for big purchases. So that stability is showing up in the Toronto market numbers? What happened in July?
Oh, absolutely. It's fascinating, actually. The July TREB report, that's the Toronto Real Estate Board, it confirms a real summer recovery is underway. Across the GTA, 6,100 home sales.
6,100. How does that compare?
That's up a solid 10.9% from last July. It's actually the best July we've seen since 2021. And TRA themselves said, improved affordability is starting to translate into increased home sales. So it's happening.
Okay, sales are up. Good sign. But what about prices? Are buyers still getting any kind of break there? Or are prices shooting up too?
That's the $1 million question, isn't it? Or, well,
Yeah.
the 1,051,799 question, to be exact. That was the average selling price.
Okay, just over $1 million. And compared to last year?
Still down 5.5% from July last year. And this is key, it was basically flat compared to last month. June to July, no real change.
So the decline seems to have stopped. Stability.
Exactly. Suggests stability, not more drops. Which means the market's starting to tighten up. Yes, active listings are way up 26.2% year over year, so there's choice. But the best properties, they're seeing more competition, definitely heating up for the desirable stuff.
Interesting. So rising sales, stabilizing prices. Is this happening everywhere, like condos, houses, all the same story? Or is it more complicated?
Oh, it's definitely more complicated. It's really a tale of two markets right now. The freehold market, so detached, semi-detached homes, that market is roaring back. Huge demand.
Roaring back how? Give me some numbers.
Okay, look at the Central 416 area, basically core Toronto. Semi-detached sales, they surged an incredible 48.2% compared to last July. 48%.
Wow.
And detached homes climbed 12.5%.
Wow.
Still very strong. And prices in that freehold segment, really resilient. It shows people are valuing that land,
Yeah.
maybe as a hedge against inflation.
That's a huge difference. So freehold is roaring. What's the story with condos? Keeping pace.
Not quite. The condo market's, well, it's different. In the 416, sales were up, but just a little bit, 3.4%.
Okay, still up, but barely compared to semis.
Right. And the average price actually fell, down 8.6% year over year. It's now around $684,257. So there's this kind of oversupply situation happening.
Which sounds like an opportunity, especially for first-time buyers, maybe.
Exactly. It's creating a significant window right now, and that buyer confidence, particularly for condos, ties back to those stable interest rates we talked about. Predictable costs help people jump in.
Makes sense. But you said window. That implies it might not stay open forever. What's the catch, the long-term view here?
Yeah, there's a really crucial long-term warning sign here. New condo construction starts. They've absolutely plummeted. We're talking down almost 90% from the 10-year average.
90%, that's massive.
It is. And it's creating what people are calling a perfect storm. We're just not building enough for the future. That almost certainly means a housing shortage down the line and, well, renewed price pressure. It really makes you think, doesn't it? Short-term opportunity versus long-term squeeze.
It absolutely does. Okay, so let's bring it back to you, the listener, planning a purchase. What's the bottom line?
Well, the data suggests that peak opportunity, that moment of maximum buyer leverage, it might be starting to fade just a bit.
But you still have leverage.
Oh, yes. Leverage is still strong. Affordability is better. Think about it. The monthly payment on a typical condo today is nearly $1,000 cheaper than at the market peak. That's real money, and it's clearly bringing buyers back off the sidelines.
So the market's moving from fragile to recovering.
Definitely. This July data feels like a pivotal moment. Clear signs of a sales recovery taking hold.
Okay, so for you listening, your power as a buyer is still significant because of the inventory levels, but be aware, things are tightening up. And if a condo's on your radar, today's selection and pricing might not stick around long term, given that looming supply crunch.
Exactly. Being informed, understanding these dynamics, and being ready to act, that's your best asset in this kind of recovering market.
So as you digest all this, think about it. What does this tale of two markets, the strong freehold, the complex condo situation, mean for you? How might today's split shape tomorrow's opportunities in Toronto? Something to consider.